So the first one which I picked up is one Infosys, targets of 1100, stop loss to be kept at 1050. Expecting Nifty IT Index to make a small bounce. I will term this as a slightly low risk because of the fact that many of these IT stocks have already gone through a corrective phase. And the other one is a sell on Jubilant Food. This is slightly a high risk trade. The stock is nearing a swing breakdown. It's clearly shown signs of weakness over the last 3-4 weeks, and I believe that the weakness is still persisting on Jubilant Food. So would consider Jubilant Food as a sell. Targets to be kept at 2040 and stop loss at 2150.
Stocks from Kunal. This has actually cooled off a lot from the top, and I know targets were coming 1300, 1400 post that result. So not a decent buy call from them, from Kunal rather, and then Jubilant on the flip side. But Rajesh, coming to you, what's catching your eye this morning, and do you have a high risk and low risk idea for our viewers?
See, I have two ideas. I would say one is a high risk idea and other one is a low risk. Although for the longer term, both are low risk because high risk, I would say to Apollo Hospital because it's run up quite a lot in recent past and there might be some consolidation in the coming months. But going forward, maybe for a time horizon of 9 to 12 months, we see quite good upside from the current levels. If you look at the business model, it's a strong business model, is a corporate hospital with more than 10,000 beds in 40 locations. And with the kind of pandemic and other things going on, I think hospital as a business model is going to do well. First, second, when international travels are open and we will see medical tourists coming into India, the numbers are going to see quite a good jump because of the pent-up demand that's being built up in there. So I think one stock that one has to look upon is Apollo Hospital, and not to forget the kind of debt reduction they are planning. They have sold their insurance business, the kind of valuation they have in their pharmacy business, all goes well with this company. And we believe that even after this kind of run up, this stock gave 20-25% upside from the current market price, maybe in the next 3 to 4 quarters. So first pick from our side will be Apollo Hospital. The second one will be Jindal Steel and Power. The company has the entire focus on debt reduction with around 34,000 crore debt in March FY20. They have a target of reducing it to 15,000 crore by FY23. They are the largest coal-based sponge iron maker in the world, and not to forget the kind of ramp up they have done in the Angul plant. With a capacity ramp up, the numbers are going to be good. Yes, this quarter they have reported some amount of losses, but we believe that going forward with the kind of debt reduction, with the kind of capacity ramp up, they have quite a good amount of power capacities. I think this company is going to do very well. On valuation parameters also, it's very trading at a very lower valuation when compared to other peer group companies. And it's one of the best companies which is providing long rails to railways, which no other steel company in India, at least till now, is providing. So they have good order book going forward from the railways also. I think this can be also good stock. We believe that this stock can touch 225 rupees in the very recent time, maybe in the next 3 months or so. But for a longer term horizon, we have very high targets. So these two are buy calls from our side.